Hello and welcome to this special year-end discussion on the state of the Indian economy. Where is the Indian economy headed in 2026? 2025 has been full of action and full of concerns, and I would even go to the extent of saying full of vulnerabilities for India's economy. Uh, we've had we've had the we've had the external sector showing some concerns. Some economists say that the external sector is a bit weak, given the fact that foreign investment flows have been negative this year, and negative by a big margin. Negative. The FIIs, portfolio investors, have pulled out close to 17-18 billion dollars. FDI is barely positive, net FDI that is, and the rupee, the exchange rate uh, has been weakening consistently, and the India stands actually alone uh, in terms of weakening, the currency weakening against the US dollar. Most other major currencies this year have gained against the US dollar by about 9-10%, whether it is euro, pound, and other major currencies. And India is the only one which has weakened against the dollar by about 8%. And most analysts, they forecast that the rupee would continue to weaken. And against this background, uh, we've had the in India-US trade deal not happening. It's the India is the only country. Now, this is a major vulnerability. Only country which has not managed to do a deal with the US, its largest trading partner. Most all other countries, all other major trading partners have done it. Managed to finish a trade deal with the US, and India stands out in this respect too. As I said, India stands out in respect of its weakening currency. India stands out in respect of both foreign portfolio flows and FDI being very, very weak. And in the midst of all this, the only thing that India was able to claim in terms of a positive was that its GDP was growing impressively, and it was the fastest growing economy in the world. Even there, India got a bit of a setback when recently the IMF came out with a report that there are sizable discrepancies in the way India calculates its GDP. So many economists are now coming out to say that India's GDP is probably 3-4 percentage points lower than what is claimed. And today we are going to discuss all this with a well-known eminent economist, Professor Arun Kumar,
Hello.
who has been saying for years now, for at least 4-5 years, that India's GDP is overestimated, substantially overestimated. And Arun Kumar was alone in saying this for some years. Now his view is being endorsed by many others. Recently, a former chief economic advisor to the Modi government, in the finance ministry, Dr. Arvind Subramaniam, also endorsed recently. In fact, he's come out with a book in which he and co-authored by he and Devesh Kapoor, a political scientist, where they say that India's GDP is actually substantially, the rate of growth is lower than what the official figures suggest. So we decided to have Professor Arun Kumar to come and talk to us about it. So welcome Arun Kumar to our show. You have been saying for a while that India's GDP is overestimated, and you've been also commenting on other aspects of the economy, including the US trade deal, including other vulnerabilities. So So Arun, tell me, how do you see all these things coming together, and what are the prospects for 2026? Are we seeing some sort of a perfect storm happening in the economy?
So thanks, Venu, for having me. I think the central point that I've been making is that our unorganized sector has been invisibilized, both in data and in policies. And because the unorganized sector is 45% of GDP, if you don't get the data right there, then your GDP is in error. And this has been going on since the time of demonetization. And I discussed this during demonetization also. And you can see the kind of error that's coming in. For instance, in the demonetization year 2016-17, the government claims, that is the official data claims, that the rate of growth was very good. It was 8% plus. Now, when everybody saw that for 5 months, the economy was down, the production was down, the trade was down, and so on, how could it be 8% plus? My own estimate in my book was it was minus 2%. So the error in the GDP estimate was about 10%,
This was
according to my.
you're talking about the demonetization year, right?
That's right. That's right. So
I remember nobody believed 8% at that time. Yeah, sure.
Yeah. So the point I'm making is that, since the time of demonetization, there have been 4 shocks to the economy, and each shock affected the unorganized sector. And that's why the rate of growth of the economy cannot be an average of 6.5%, 7%. My own estimate is it's more like 2.5%. So we are overestimating by about 4%, because the unorganized sector is not captured properly, is captured on the basis of proxying with the organized sector. Now, organized sector is rising, but the unorganized sector is declining. So a declining sector is proxied by a rising sector. So the error is roughly about 10 to 11% growth of the unorganized sector. So what is declining at about 5% is said to be rising at 6.5%. So therefore, the error is very large. And that's why I argue that the Indian economy's GDP currently is 48% less than the official figure. Because if you compound 4% over 8-9 years, then you get this figure of 48%. So we are still only about $2.5 trillion, not $3.8 trillion. So we are just ahead of Italy, not ahead of Japan, as has been claimed by the government. So therefore, if the GDP figures are wrong, then actually your investment figures would be wrong, your consumption figures would be wrong, and so on and so forth. So in other words, your macro is going wrong. And that's why you see when the government says that we are investing, public sector is investing more, but the private sector is not coming forward to invest, then the private sector says that when demand is inadequate, then how can we invest more? And they're right. So why, if the rate of growth is 8%, why is demand inadequate? Demand can only be inadequate if our consumption data is not right, and actually consumption is much less. And especially if 94% who are employed in the unorganized sector, if their incomes are down, then of course the total demand in the economy will be down. So this contradiction between an 8% rate of growth and capacity utilization data from RBI showing it's only about 75%, okay, and it's been hovering at about 70 to 75% for the last 9-10 years, then it obviously shows that the GDP figures are not correct. So this 8.2% growth probably is not correct, and that's what I've been arguing. So in effect, we are policy is going wrong, because policy is based on the official data, and RBI is also using the official data. So therefore, RBI's figures also go wrong, and the central government's figures also go wrong. And since IMF has now said that the GDP data, the official GDP data is suspect, that adds weight, because till now that was not being said. It was said IMF is supporting us, the World Bank is supporting us, ADB is supporting us, the various banks which come out with the reports, they are supporting us. But now that the IMF has also said, and IMF specifically mentioned that the informal sector data is not appropriately captured. It also says there is a large discrepancy between the two ways of measuring the GDP. And that's something that we have been pointing out for the last many years, that the discrepancy figure is going up and down. And you can see that before demonetization, the discrepancy figure used to be 0.5% of GDP or thereabouts. Now it shoots up and shoots down, So it's going haywire, up and down, because you see, both the production side and the expenditure side both have unorganized sector data, which is not captured properly. And that's why the figure is wrong. So in other words, if the GDP figure is not right, then you're planning for various things in the economy, that goes wrong. And that's why, the private sector investment is not going up as it should go if the economy is growing at 8% and so on. So in other words, there's a lot of doubt and there's a lot of instability as a result. Now, add to that the fact that, as you rightly said, the trade agreements, with the US specifically, that has not come through. And that has created a huge uncertainty because you don't know whether, exports will go up or they'll go down, whether we'll be able to export more. And the threat is that there may be a tariff war, not just US levying high tariffs, but because there are surpluses with all the countries in the world. China has surpluses because its export to US are down. EU has surpluses. So everybody's going to try and dump on others. And therefore, the tariffs will go up. So a generalized tariff war may come up, in which case our exports are not going to do well. And we have been depending on exports doing well rather than on the internal market. So we have to change strategy and we have to depend more on the internal market rather than the external market.
Yeah. So, Arun, so again, as I said earlier, you had been saying that the GDP methodology has, for years now, since demonetization, I think you've become more vocal, especially because of obviously because the informal sector got hit very badly through demonetization, through GST, even through COVID. Now, the view that you took now is being endorsed broadly by institutions like IMF, and people have started questioning the integrity of data in India. And the latest, as I said, the latest one was Arvind Subramaniam in his book, A Sixth of Humanity, which he has written along with the political scientist Devesh Kapoor. I was reading that in one chapter, he's also now coming down to figure of some 3 to 4% as India's real GDP growth. So there seems to be, Arun, there seems to be some consensus now around what you have been saying. And what is more worrying, Arun, is that I find that global investors are now asking this question as to is 8.2%, is this for real? So global investors, global watchers of Indian economy, psychologically they're all beginning to doubt. You would argue that this is not good for for India because in the past, as you know, India's data framework, India's data policy, the way CSO was run, data department, it had a lot of credibility with global institutions because global institutions, they're important because foreign investors, they look to them for cues. So this data integrity, where is this leading us, Arun? I just want a brief view from you. And do you feel that foreigners are beginning to doubt Indian data in a very meaningful, in a very substantial sort of way? Huh?
So, privately, when you talk to people, they say, yes, there's a problem in data. Publicly, they are not saying so. But now that the IMF has said it, I think the idea that the data is not credible, that has spread much more. So that adds uncertainty, So A, the trade uncertainty, and B, this data uncertainty, they together are deadly. Because when there's uncertainty, then investment comes down. And that's why I think the FDI net, as you said, in some times has become negligible. The foreign portfolio investment is going out. And FPI is also going out because you see the US market is doing very well. The 7 companies, the technology companies are doing very well. So money is flowing out from India to there. And also because the rupee is depreciating, the dollar return is coming down in India. And that's why the FPI will be going out. And the chances are, because of the trade problems that we have, the current account deficit that we have, I think the rupee will weaken further. And as the rupee weakens, I think the more of the funds will flow out because the dollar return will come down. So all this uncertainty is not very good for the country. And the government has to go back to actually real data. Because you see, foreign investors may be interested in the overall economy and not just in the organized sector. Because the overall economy determines the demand. The formal sector may be growing fast because you see how the demand is shifting from the informal to the formal. Okay, so I've been arguing that like for instance in the trade sector, e-commerce is growing at 20-30% at the expense of the local stores, which are actually in the unorganized sector. Similarly,
Yeah.
in the other industries, we have evidence. So the higher is the growth rate of the organized sector, the sharper is the fall of the unorganized sector because demand is shifting. And this
Yeah.
demand shift has been going on, since the time of demonetization. That's why my argument is that the rate of growth is down to 2.5% or thereabouts. Because the faster is the growth of the organized sector, it implies faster is the decline of the unorganized sector, because the overall economy is not growing so much. So all
Yeah.
this is very bad for the economy, and that's why I think what you find is that to get the trade deal done, now the government is moving on the labor front. Because if you have to concede to President Trump, then you may have to open up the agriculture sector gradually. And to open up the agriculture sector, then you have to offer something to the rich farmers. The rich farmers are being offered that, okay, for 60 days, there will be no employment guarantee. And therefore, the wages for those 60 days, which is the peak season in agriculture, those will come down. And this has been a demand of the agriculture sector. Similarly, because you see, Indian trade is now going through third countries, through UAE and through Southeast Asia. So
Yeah.
because of that, the margins of the exporters is coming down. So A, there is higher tariff in the US, and B, if they have to export through third countries, then they have to offer margins there also. And that's why the labor code has suddenly been introduced. So my suspicion is that the government is now going to concede to what President Trump was saying, what he's demanding, but in a gradual way. And
Yeah.
that's why these changes on the labor front and the labor code, etc., those are coming in. But the problem will remain, because the rich farmers, what they will get through depression of the rural wages will be much less than what they will lose when the trade opens up with the US. Because the American farmers get a huge subsidy. It is estimated that by some people that they're getting, an average farmer in the US gets 25 lakhs of rupees subsidy per annum, whereas an average Indian farmer earns barely a lakh and a half. So there's just no comparison between them. And that's why
Yeah.
you see the problem could arise in the coming year, that labor and farmers, they could begin to protest. Because if the Indian economy is opened up to Indian agriculture is opened up to trade with the US, then the rich farmers would also suffer, the workers would also suffer. And therefore, we could have a situation like we had when the farmers were protesting. Because if
Yeah.
the
Yeah.
farmers
So, yeah.
the farmers and the workers protest together, it'll be a huge number. It'll be almost 800, 900 million people who could be hurt.
That's a possibility. If things don't improve at the bottom of the pyramid, there could be unrest. But uh, but Arun, coming back to the macro kind of fundamentals, what worries me is, I want your views on this, that India has not been getting foreign portfolio investments, net foreign direct investments in not forthcoming. 2024 was negative, 2025 is hugely negative, and many analysts estimate that 2026 will also be not very positive, simply because the point that you were making, since there is no trade deal happening, there is so much uncertainty that people don't invest in an uncertain environment. There's also a worry within the I detect a certain worry within the establishment. Like today, there was a report saying that banks have started asking individuals. As you know, RBI allows individuals to take
Yeah,
$250,000 a year under the LRS scheme. So today, there's a
right.
report on the front page of Economic Times that banks have started asking questions. The banks have started asking for certificates to assess the source of the funds. So obviously, some barriers are being put to money going out. Government has been worried because the LRS outflows have increased over the last 4-5 years substantially. Similarly, overseas investments by small firms, there are norms for that. That has also been going up. And more than that, a lot of promoters, foreign private equity investors who have been investing in Indian IPOs, public offers, they are also selling their stakes and going out. So there's a serious worry within the government, and which is also reflected in the way the government is opening up the insurance sector, private banks, 100% FDI and insurance. And these are all, in my view, these are all slightly desperate signals that there is a worry on the external sector. Now, on the external sector, Arun, I have a specific question. In 2013, we had a similar vulnerability in the external sector, which was linked to the taper tantrum. The US Fed Reserve was trying to withdraw accommodation, so a lot of capital was moving out. And India was at that time cited as one of the fragile five economies. The other four were Brazil, South Africa, Indonesia, Turkey, and in that year 2013, the rupee kind of weakened by 20%, and a lot of measures were taken by the RBI to get more NRI deposits, etc. And a lot of drawdown of reserves also happened. But at that time we had about, I think, $300 billion, 7 months import cover. Now today I'm looking at some sort of parallel. Today, although we are not that vulnerable, we have 600 billion plus reserves, but that also covers about 11 months imports only. But India stands alone as the only country which is whose currency is weakening, rupees weakening consistently against the dollar. Rest of all major economies are actually strengthening against the dollar. So in that sense, at that time they were fragile five. So today I get the feeling that India could be seen as, from an external sector perspective, could be seen as a fragile one. So what is your sense? How do you see this?
So my take on that is that as long as Trump's tariffs are penal tariffs on India, India is the most vulnerable, because other competitors, they have much lower tariffs. So the expectation is that India's trade would be hurt the most, and therefore the rupee would weaken. The balance of payment would be a problem, because it's with the US that we have the largest trade surplus. With most other big economies, we have a trade deficit. So that's why I think the rupee is weakening against the dollar, whereas other currencies are actually strengthening. And that is because the credibility of dollar has gone down. Whereas in 2007-8 or 2012-13, dollar was very credible. So anytime there's uncertainty, people would move into dollar. But now the people are moving into gold rather than dollar. And therefore, all central banks are buying gold, and the gold prices are going up. And as gold prices go up, our current account deficit expands further. So these are the factors because of which the rupee is weakening against the dollar, whereas other currencies are actually strengthening against the dollar, because the credibility of the dollar is going down. And the US economy is facing various kinds of problems, even though the latest figures show a good growth in the economy. But there's a problem of employment generation, there is an inflation creeping up. And then, over a period of time, the prices will begin to go up, and the US economy could go into stagflation. All the information that's coming out of the US is that actually people are hurting. Grocery prices, etc., are going up, and that's why Trump has given concession on import of certain items so that the common man is not hurt in the US. So therefore, our position is different than that of the other economies because of the Trump's tariffs. Now, are we going to be able to sort that out? And business is applying pressure. And that's why, as I said earlier, we may be slowly opening up the agriculture sector to trade from America. And this could be a concession that we might offer, because businesses want that to be done. But that will face a political storm, because the farmers and the workers would together begin to protest. And they are very large numbers. And therefore, the government will be in trouble. So government doesn't know which way to go, whether to give those concessions on agriculture or not give, because politically it'll be very sensitive. So that's why I think the government is not able to plan things out properly. But the signals from this replacement of rural employment guarantee scheme by the G Ramji bill and the sudden implementation of the labor code, those indicate that the government is slowly moving in that direction. And it also needs to be said that the government has been adjusting to the US. Like in the budget last year, they gave concessions on tariffs. Then they increased imports of energy from the US. And then the cotton, they've given 11% concession on the duties. So the cotton import from the US has increased. And all this suggests that government is willing to concede. And therefore, in a sense, how would government plan for it? I think that's a challenge of 2026, because if you open out the agriculture sector and there's a political storm, then the government would look very fragile. So we are a fragile economy at the moment, all because of what Trump is doing, and because our internal demand is weak. So these two factors together are what are hurting us.
I think you very rightly point out these two things. Our fragility is probably caused by these two twin factors. One is the US really bearing down on India on various fronts, and internal demand being weak. But what is your sense about where is the trade deal headed? Because 2 weeks ago, if you recall, we had a statement from Trump that's very close to being clinched. Then suddenly we didn't hear anything. Then there was an American team which came here, a trade team, high officials, and then there was some expectation that something would be announced. Nothing was announced, and then there were reports based on conversations with US officials that it could get pushed back to next year, March, April, even beyond. So what is your sense? I mean, what is going on? Is India resisting certain things? On the one hand, you're saying that India is willing to concede on agriculture and some labor reform, etc. Now, all these things are also being done. Arun, remember the opening up of insurance sector, letting foreign capital come into private banking. These are all being done also partly to enhance global confidence, investor confidence in India. I don't know whether that is happening, because they appear to be very piecemeal kind of measures. So what is your sense? What exactly is going on?
I think services sector is what America is strong in, and they do want concessions. So that's why what you point out about insurance and banking is also another concession that is being offered to the US for the trade deal to be done. Because a trade deal has become very important for India, but the kind of concession that the US wants on agriculture, that's, I think, the most difficult one. And therefore, the government is preparing the ground for that. That's what I sense, that by doing this G Ramji bill and so on and so forth, so the ground is being prepared. But whether the US will bite the bullet at this point of time, that is not very clear. Because every time India has been conceding, the US has asked for something more. So therefore the US, willingness to come to a deal with India, I think it's some chemistry between, Trump and Modi, because I think Trump is very transactional. Wherever he feels he gets enough, then he does a deal. Where he feels he's not getting what he really wants, then he doesn't do a deal. You can see that, with Canada also. Canada was one of the closest partners. They ultimately came to a deal when Canada conceded. Initially, Canada was not conceding, and therefore the deal was not getting done, and Trump was imposing more and more tariffs on it. So I think, this chemistry or lack of chemistry now between Trump and Modi possibly is one factor in this. And that's a very chancy and iffy thing. At what point would Trump be satisfied? It's not very clear. So I think this is the uncertainty that prevails at this point of time.
So final question, how should India prepare? Now we are looking at a budget in another month. How should India prepare in terms of policy? As you also just pointed out, there's been a lot of jerky, piecemeal kind of policy measures coming to send positive signals to global investors, maybe to the US in the context of the trade deal. But the outcome seems to be, outcome still seems to be very negative so far. I mean, we have a negative balance of payment last year, 2024, negative balance of payment this year, 2025. And as I said, many analysts say that next year also, the FII portfolio and FDI flows are likely to be very, very weak. So what sort of budget should the government look at, or within the budget, what sort of policies should they announce to create some confidence in the domestic economy? As you said, there's so much weakness in the domestic economy. Nobody believes the GDP growth rate, and it is reflected in the in the rather tepid consumption and tepid private investment uh, across the economy. So what should be done? I mean, what's the way out?
So, Venu, I've been arguing that there's a need for a mindset change. The mindset change has to be that we cannot depend on the external markets given the situation in the world. And especially if a tariff war, a generalized tariff war takes place, then our exports will be hurt and our balance of payment would be hurt further. So, in other words, the mindset change has to be that we look internally at the internal market. The external foreign investment that comes into India is barely 6-7% of the total investment. So we
Yeah.
cannot depend on that to really spur growth. That is needed for technology purposes, but that's not going to spur growth. So how
Yeah.
to boost internal investment, and that requires demand. And where will demand come from? It will come from the unorganized sector where 94% of the workers work. So if there the incomes go up, then the demand will be boosted and then the organized sector will also grow. So I think what requires to be done is to create employment. What we are not doing is generate large employment. Even in the budget, if you see, bulk of the capital investment is going into capital intensive sectors, whether it be highways or railway
Mm.
freight corridor or power sector or IT sector, and none of them generate much employment because now even construction is highly mechanized. It's not
Yeah.
the earlier kind of labor intensive employment in the road construction, etc. Now with big bulldozers and JCBs and cranes, you need hardly 10 people working on the site, whereas earlier there'd be hundreds of people working. So
Yeah.
our focus has to be shifted towards rural employment guarantee scheme, and that's why the rural employment guarantee scheme needed to be strengthened rather than weakened as the G Ramji bill is doing. Then we
Yeah.
needed to spend more on education and health, which are also labor intensive sectors, but the government cuts them every time the deficit rises. Then the mechanism is to cut the social sector expenditures, but that's where actually you can generate a lot of employment. Then the
Yeah.
third is we have not been really spending enough on rural development and on agriculture development. We need to
Yeah.
boost that up so that these are the labor intensive sectors. So mindset change has to be to shift from the focus on external sector and organized sector to the unorganized sector. Now, that
Okay.
doesn't mean that the organized sector will suffer because organized sector balance sheets have become very good, especially after the 2019 corporate tax cut. They were getting 1.6 lakh crores per annum, and therefore they
Yeah.
cleaned up the balance sheet. So they have surplus which they're not investing. So if demand goes up, they'll start investing more, and therefore the economy would get a boost. So that is required to be done. Then I have been arguing that GST has to be changed. GST is a last point tax. It should be only collected the last point, and therefore the problem of input credit and all the corruption around it, etc., that'll go away. I've been arguing for that since 2015, saying the Indian economy is not like the French economy, that a GST can work in the Indian context like it may
Yeah.
work in some other economy. So
Yeah.
therefore, these are the kind of reforms that the government can do to boost, and it should stop saying that we'll organize the unorganized. You
Yeah.
cannot organize the unorganized. 85% farmers are less than 5 acre. Large number of farmers are half acre, 1 acre, 2 acre. They cannot become organized. Similarly,
Correct.
there are 6.5 crore, micro units. Average employment is 1.7. They cannot become organized. You can only kill them. And if you
Yeah.
kill them, then the demand would be killed further. So
Yeah.
government requires a mindset change where it focuses on the unorganized sector rather than on the organized sector. And instead of depending on the external sector, depend more on the internal sector boost in income. So if micro sector incomes are boosted and agriculture incomes are boosted, enough demand would be generated.
It's very clear. The solution is to strengthen the sinews of the domestic economy, strengthen the domestic economy, and don't. It's an important point you made. Don't force the unorganized sector to uh, to become organized. Let it happen organically through better income generation, better policies. So I think this is a very important insight, because there can't be a top-down policy to force the unorganized to become organized overnight. It has to happen over a period of time. Thank you very much, Arun, for talking to us. We got a lot of insights, and let's see what is in store in 2026 for the Indian economy, and let's see how the budget pans out. Thank you.